Pivotal moment here for Netflix, which has been the dominant player here in streaming, but it's down 75% from its peak. And I think this is an opportunity to start taking a look at this stock. So if we take the long-term chart here, this is a chart of the stock since its IPO, and this is a log normal chart. What you see here is that the stock is trading in a well-defined channel. And since the peak that we saw here of last year, it's traded now towards the bottom end of the channel. As Carter would say, we've traded down to the bottom end of the channel to the penny, and we're starting to bounce. So if we zoom in here to the last 5 years, what we have here is a chart of Netflix, and we're bouncing off that roughly 170 level. That's a 75% haircut we've seen on this particular stock. And the question is, how far can it bounce? So the first resistance level we see here on Netflix is around the 240 level. So that would be my first target price here to the upside on this such extreme downside move we've seen here on the latest earnings report. And then if we look at the business itself, this is a company that is focused entirely on user acquisition here over the past decade or so. And I think that as we sort of shift to see some of that slowdown in terms of growth for subscribers, this is something that a company needs to start looking at profitability as well as potentially returning cash to shareholders. And I think given the fact that it's currently trading somewhere between 15 to 16 times next year's earnings, this is a stock that I'm very comfortable looking at buying at this level.